Okay, and we're live. Good morning. How the hell do you look exactly the same, Tanner, when it's 7 a.m. versus when it's like I look like somebody just beat me up, man.
Lighting, baby.
Yeah, probably.
Good morning.
Manuel,
Good
how's it
morning.
going?
Sorry?
How's it going, man? We haven't chatted in a while.
Yeah, it's been a while since I've been on stream. Quite well. At least I can complain over the past few months. Maybe I should
has been a good
stay
few
off
months,
stream
Nebius.
more. I should stay off stream longer.
Yeah, you're gonna go off the grid soon if these investments keep paying off like they have been.
Yeah. We're not going to hear from you.
No, I mean only Net and Rocket Lab as well. But the other everything that's not AI or space is not doing that well.
Yeah. Whew. So we got numbers dropping 4 minutes probably.
Numbers are dropping soon. I think we have maybe Neil is gonna join us soon.
Awesome.
And then we'll have about an hour to talk about numbers, and the call is at 8. And I have to leave pretty close to right after the call.
Okay.
We have a lot of different companies
Oh, man.
reporting as well.
Yeah, Wix reported. Manuel, do you want to just give the 5-minute sort of spiel on Wix? I haven't seen the numbers at all.
I mean, base 44 was way better than I expected, and that made the margins drag be a bit wider. And then they also had a bit of an impact from the Middle East conflicts. I mean, overall, I think the results were good. Were not amazing, but I was really surprised with base 44. I thought they would show like $130 million in ARR because they just crossed 100 in March, but they are already at 150, which is pretty impressive. But yeah, I still haven't had time to look at everything, but everything I've read, I mean, it's pretty much the same as unless fuck. How can I say this? Sorry, I'm still sleepy as well. Apart from the base 44 surprise, and the numbers are not yet reflecting the 30% buyback. So the EPS miss wouldn't be that big if they were already with the new shares outstanding. So yeah, not perfect, but I wouldn't call it that surprising either.
Gotcha. Neil, how's it going?
Hey, Neil.
Morning. Good morning, everyone. How are you? All
Good morning.
Good. Also, I might just be speculating here, but I have a feeling they had to force out all those press releases yesterday because they're going to drop a big one today. That's all I'm going to say. Could be speculating, but it felt weird that they dropped 3 press releases in the span of 2 hours. And I don't know, just interesting.
I think Roman gave it away, man. He was saying oh, can't wait to see y'all tomorrow. And then somebody posted that they're going to smash earnings. There's going to be a beat or something. And then he retweeted that. And I was like,
yeah, pretty crazy. Someone said, I think that Nebius is going to cook, and he just retweeted it. So
we're trying to read between the tea leaves, and this dude just said, we're going to smash earnings.
It's going to be fun.
Yeah.
When did numbers come out at 7?
Yeah, I think they come out in a minute. Pretty sure. I'm just refreshing the investor page.
Yeah, I'll have X up in the financials. If anyone gets it early, please send it in the private chat. That way we can distribute it. You didn't get the memo? He's wearing it underneath.
Somebody says, let's have an NVIDIA deal. We had that.
Okay, results should be out.
We're pumping.
The stock is pumping, yeah.
Oh, yeah. Oh, yeah.
This is so good for my covered calls. I'm going to be left behind whenever this stock runs.
Which one did you take?
200s for July 17th.
Oof.
It's not that I wanted this. It's what I had to roll to.
Yeah. We're at $194, ladies and gents.
195 right now.
All right, I'm refreshing too. Let's see.
I got it.
What is it?
Thrown in the private chat.
$3.99
Thanks.
in revenue.
And I got
$2.40 in EPS versus a negative 78 cents. Q1 revenue grew 684%. All right.
Contracted power guidance up to 4 gigawatts now.
Yeah, 4 gigawatts. Oh man.
Wow.
Jesus.
Over 4 gigawatts.
Oh wow. Oh, they announced. Oh, yeah, they showed the Spain site, a site in Pennsylvania, a site in Minnesota. Those are 3 new sites.
The new. Okay.
Anyone have the here? Someone want to pull up the press release so everyone else can see?
Big Tevis.
Yeah, if you guys throw it up on the thing, I'll throw it up. I don't have it yet.
Hold on, me.
Investor Hub. Here we go.
Share it.
And we're at all-time highs.
Yeah.
Oh my gosh, that happened quick.
About those 200, Tanner.
I'm gonna have to roll.
Oh man. Oh man.
Cash position. Cash position ending Q1 $9.3 billion.
Yeah, well, I saw it. What is that about? Wow.
What, a huge cash position?
Yeah.
Is that from large deals like Meta or Microsoft?
No, and the convertible notes and the investment from Nvidia.
Gotcha.
A lot of factors.
Let's see this. Okay, hold on.
Jeez.
Do you know what EBITDA was?
2.4. Or no, EBITDA.
4.
Not EPS.
No, 129.5 versus 90
Oh wow,
million.
32% margin. Wow. I think they were 24 last quarter. Much better EBITDA margin. Goodness.
ARR grew 674% year over year, while revenue accelerated both quarter over quarter and year over year. Our deepening customer relationships are strengthening our unique position to serve industry-wide demand for both compute and cloud services. We also demonstrated the operating leverage inherent in our business. Nebius, our AI cloud business, nearly doubled its adjusted EBITDA margin quarter over quarter to 45%, a testament to our trajectory towards 20 to 30% EBIT margins.
ARR at $1.92 billion. That's up 54% quarter over quarter.
1.92? Wow.
1.92, yeah.
That's exactly what I guessed in my earnings preview.
Jeez.
Yeah, and if you guys look at the sites too, 3 new sites it looks like based off last quarter. We had Pennsylvania wasn't there before. Minnesota wasn't there before.
Well, the second Finland site wasn't there, right?
Yeah.
I wrote a post about that, predicting that new site. And the new one in France as well.
And the one in Spain is there now too, the one that...
And the one in Spain.
Yeah. It's honestly so funny, like, when you look back, like, we're such nerds that we find these positions that are being hired, and then 3 months later they announce the site. I just love it.
I mean, it pays better to be a nerd in this than in anything else.
Oh yeah. I'm trying to see if there's any other big news here.
Yeah.
Neil, what are you thinking, brother?
I am looking at last quarter's report and comparing to this one, and we'll see if something major has changed that we still didn't notice. So for now, looks good. We'll see if we can notice something before the call.
Yeah, this thing, we're going to go through the entire report by the time we get to the call. So,
yeah, I want to know how they got 9.3 billion cash.
Share the screen.
Yep. They didn't raise their ARR of 7.
Yeah, I didn't think they would. I feel like they're going to have...
I definitely think they would.
No, I think they'll have stronger visibility next quarter. I think next quarter they'll raise it, but they wanted to wait for stronger visibility.
Yeah,
and
because if they
confirmation.
raise, I think it's smart not to raise it right now.
We're going for 200 right now.
Yeah.
199.95.
Really?
Oh man.
Yeah.
Oh man.
200.
I mean, I think
That's
it's
Oh, we just
spiked.
hit 200.
Yeah, we're over 200.
I think it spiked right after my posts, man. You should disconnect your algos. 203. Damn.
Sheesh.
No complaints.
And like we're not even at the call yet, so this is gonna keep going up as they as Arcadi gets asked about demand.
Yeah.
And
Yeah. That's,
I mean, maybe.
I mean,
Poor
he's
Arcadi.
like, stop asking me this.
you must.
He's funny on the calls, man. He doesn't care at all. He wants to get
he
back
is
to work.
hilarious.
You can hear him take deep breaths between his answers. Demand is
Frustrating breaths.
outstripping supply, and we got to get back to work.
But when he's on podcast like the one with Axel, he was pretty good there.
He was
Yeah,
good.
because Axel invests in Nebius, so they probably forced him to be excited.
You also could tell it was a little scripted. Like he had the questions beforehand.
Yeah.
You guys noticed. Yeah. He
Call
looked off to his
starts
left all the
at
time.
8. Call starts at 8 a.m. It is currently 7:07 Eastern, so you got about 53 minutes there.
Go get yourself a coffee. Get ready for the call. Get your notepad out.
Yeah, what do you guys make of all this cash? I mean, I get it, how they have it, but this is going to be burned down throughout the year, you think?
Yeah.
I mean, based on the
course.
capex that they gave us,
Yeah.
No, I think they're going to get into T-bills.
No, I mean, like, I was more asking around more acquisitions versus just a normal burn.
I mean, most of the acquisitions will probably be paid with stock.
Well, because the one that they had, the couple that they had are fairly smallish, like the Clarify and IG.
Yeah, and I think at this valuation, it makes sense to use shares. Like, Agen AI was like $600 million. That would be like 1.5% dilution. Not even that much if we are at $200. So you can even buy like a huge acquisition with just a single digits dilution. So I think they should use the cash for capacity, and these type of creative deals probably just.
We don't know the terms of the Clarify acquisition, do we? We just know they acquired the team and like basically posted that they're excited about it. We don't know any terms of it.
Yeah, I mean that just came out last night, so maybe they'll talk about it.
Yeah, I have a feeling someone will ask.
So are like Iren and CoreWeave investors like breaking their pencils today, or?
I don't know. You're a CoreWeave investor. Tell us.
Yeah. Tell us.
I love the cash position. They're like, I think that's the big concern that people have with CoreWeave is just the amount of debt that they're taking on is insane.
Yes, welcome to the club.
The terms as well.
Right.
Because, for example, Iren, to be fair, the terms of the convertible notes were pretty good. Like when you compare them with CoreWeave, I mean, and even if you compare Nebius when they raise compared to, but I was also surprised with the last raise from CoreWeave. It wasn't as bad as the previous ones. So I guess those lending money to CoreWeave or wherever, they just understood that CoreWeave is now too big to fail because NVIDIA is never gonna let CoreWeave fail. So
exactly.
I understand your thesis on that side.
I mean, it's also the valuation. There's not too many ways that I can look at the pricing of Nebius versus CoreWeave. Obviously, I can maybe look at adjusted EBITDA margins, price to sales, but I think the actual costs and the margins long term for these businesses will be similar. Maybe Nebius builds their own racks. Maybe there's ways to lower costs across both, but I think that the end game is very similar. And the fact that I know that CoreWeave is not going anywhere, and their price to sales is like 7 or 8x versus Nebius is like 60 times. I think that there's eventually a price that I will be willing to pay for another NeoCloud, but obviously I have way more Nebius than I do CoreWeave.
I think the question is more about how will they translate that revenue to the bottom line, because a big part of that in this type of business model, which is really capital intensive, is how you get your financing terms and how you get your capital. So I think the big question investors have regarding CoreWeave is whether they can get to a pretty interesting bottom line. And with Nebius, you have several advantages in terms of the vertical integration on the hardware side, which lowers the total cost of ownership. CoreWeave also has pretty good software, so I don't think that's a problem for them. They don't have the inference platform like Nebius does, but they're still very strong, and every benchmark tells you that. So I really think the problem and what scares investors away is really the terms, because that's what will drive your bottom line. You can say they have huge EBITDA margins or huge EBIT margins, but the real deal will be to translate that EBIT to the bottom line. And I think at some point, or even at this valuation, considering how huge the demand is right now, I wouldn't consider CoreWeave a bad investment at all. Otherwise, I would be bearish on the sector, and that's obviously not the case. But I think that's the big question mark for investors. And we're at 205. Jesus.
Oh man.
Yeah. For me, it's like I think the entire sector will do well. And do I want to keep buying Nebius, even though I believe it's still going to continue to go higher? But at what valuation makes which NeoCloud the best buy? Because obviously, operationally, Nebius is my favorite.
You need to adjust the valuation of Nebius for the other assets as well. If you do that, you'll see that.
Dude,
but I'm looking at it through Nebius Group.
I mean, if you're looking at it through Nebius Group, then the valuation should be much more attractive, because ClickHouse alone.
But when you check Nebius Group numbers, you don't have, for example, the ClickHouse stake accounted for. That's what I'm trying to say. Like, you need to adjust, at least adjust a bit.
Let's say the valuation doubles on ClickHouse. Their stake goes from 3.75 billion to, let's say, 6 billion with a little bit of additional dilution.
Yeah, that's going to happen this year.
No, I agree. I agree. But today,
I think. Sure, I was going to say, I think ClickHouse is like $12 a share as a part of Nebius. Like if you subtract ClickHouse right now, it's $12 a share. So
yeah, whenever we open up today, the market cap is going to be well over $50 billion. It's a shrinking percentage of their overall market cap. Like this company's market cap has doubled in very, very short period.
Yeah, for sure.
Oh, the target of over 4 gigawatts. Sorry to mess with the over 4 gigawatts by the end of 2026 isn't even the big headline. They already have over 3.5 gigawatts of contracted capacity, like right now.
Oh wow!
I just saw a post from Peter Morley, and he said that. So let me find it on the.
Bro, let's get Peter Morley on here. Like that.
Yeah, in the morning stream.
Yeah, it's here. Contracted capacity already exceeds 3.5 gigawatts, far surpassing the goal of 3 gigawatts we set for the end of the year. This is crazy.
Yeah, that's what that 5 gigawatt and with the NVIDIA deals.
I thought power was the bottleneck.
Yeah, I was gonna say the same thing, Manuel. That I saw Nebius purchased $2.5 billion of GPUs. I'm surprised they didn't make a press release about it. I figured that'd be the way to go, right?
If I speak, I'm in big trouble.
I don't want to be in big trouble.
Great quote. Jose Mourinho. Feels good. Feels good.
Yeah, it's become increasingly easier to hold and want to buy more of this company. It's pretty nuts.
Are you guys still buying? Like, when was the last time you guys bought?
I think 120. So like a month ago.
Yeah, I think that's about where my last buy was as well.
No, in March actually. Good times.
Yeah, 6 weeks ago.
I remember whenever Nebius was going down last, not this most recent week, but the quarter before that on Iren's earnings. If you guys remember that after hours movement where Iren, I think, went down to like $29 or something.
Like 30% down and then closed the day after in green.
And Nebius, I think, was in the 60s or something after hours as well. And I called Tevis and I was like, brother, what's going on? And he literally had like dread in his voice. He was like, dude, I am. And anyway, so now he's in a very different position. And now every time I call this guy, he's laughing and he's smiling. And it's funny how fast things change. 3 months.
Dude,
thinking about retirement.
I was telling Tanner last night, I was like, dude, at that point, I had written cash secured puts like $35 in the money, $40 in the money. Like when we were at 70, I was like, yeah, 115 sounds good.
That's insane.
But it was for June, and we hit 200 in May. So I was like, I was off, but I could have written 150s.
Could have written 150s.
You still think they're going to drop a press release of a big deal somewhere today, Nate?
Well, I don't know if it's going to be a big deal, but I thought it was going to be. Go ahead, Manuel.
Look what I found. They said we have now secured 2 gigawatt scale sites in the US. So one is independent, the other one we don't know about.
Interesting.
Wait, where did you find that?
Oh, it's here. We are announcing a new site in Pennsylvania where we have secured power for a deployment of up to 1.2 gigawatts.
It's at the bottom of page
1.2
3.
gigawatts.
We are announcing.
Yeah. So
today.
Soon.
Yeah.
Okay.
Yeah, interesting.
Very nice. Nvidia is up also 2%, probably because Jensen's going to China or something.
Yeah, Jensen's on the plane. 225. I've got covered calls out for this one for next Monday for 235. So if anything, if my track record prevails, we're going to be over 235 by Monday. And I'm going to have to sell out of those too.
I've got 220 covered calls Nebius for this Friday. So far,
those should be fine. That should be fine.
I got 215, so
we're all degenerates.
I mean, I was happy yesterday when things cooled off a little bit, because if it continues, I will be like, even 220 might not be safe.
I was talking with Tevis, and I was like, yeah, I've got 160s for, I forget what it was, but it was before earnings, but like a week before earnings. And he was like, dude, you are so screwed. But the premiums are so high, I was able to just continuously roll. I got from 160 to 200 and only had to push out my thing like a month.
Yeah.
And that's probably what will continue to happen. I might have to go to August or something like this and get 230s.
Brother, we could get 300.
Another very good point. Sorry.
No, I appreciate you cutting in.
I'm just reading everything. Own capacity now accounts for more than 75% of contracted power.
I just saw that too. I literally just read that too. That's crazy. Oh man.
Oh, collocations. Oh, collocations.
Do we want to just throw up the
thing? I can't be on stream.
I
like this. I like this sassy side of you.
I can just throw up the thing. We can read it together.
I don't show that side on X much, but I just laugh at home.
The live streams are dangerous.
Yes, they are. We can't go back.
More than 9 billion of cash.
Yeah.
Plan to deploy this disciplined manner, further expand the capacity.
If you're gonna read it out loud, because you're doing like the half read out loud, half read in your head. In Jersey, we continue to serve our customer commitment.
I mean, that was update.
Jesus.
I'm just trying to scan to see if there's anything interesting to pull out.
Yeah, I'm trying to. It's hard to like read and comment at the same time.
Everything is interesting.
Who out of the panel here is buying more at 200?
To be blunt, I am not.
Or if
I'm
this
not
dips to
buying more.
190, is that the buying opportunity?
Not for me.
Tanner
But
for
Goodness.
since SoFi is under $16, are you buying Nebius at 200 or SoFi under 16? This is the question we have to
that's
ask
a good
ourselves.
question. I'd probably say Nebius, right, in this environment.
Ooh. Tanner bearish on SoFi. My reaction.
Yeah.
Justin.
Tanner bearish on rate hikes for SoFi.
Yep.
News just in.
Oh, on page 6, they said in Q1 we delivered all capacity commitments across AI cloud clusters on time.
Someone in one of your chats said SoFi is a wannabe bank.
I mean, they're an actual bank.
There's two groups. There's people that say it's just a bank, and then there's this new group that's forming that SoFi wants to be a bank.
Can't win.
Scheduled to begin in early 2027 for Meta. I thought they already delivered a tranche of Meta, or was
that's the first contract?
Yeah, that's the original.
$3 billion.
Because I assume that the new contract is for one of the data centers being constructed. Probably, my guess is that it's the 310 megawatts in Finland, but it's just a guess.
Bro, what is this? Time to sell 1010. This the core business will grow faster.
Oh, I mean, 1010 is just a way of sourcing.
Peanuts.
Well, I think they were even talking about potentially selling off AV Ride as well. And
No, but I saw that you're talking about the sentence in the 20F filing, right? That exact same sentence was in last year's 20F filing. So they want to do it at some point, but that doesn't mean it's soon.
The revaluation.
You're like an Uber shareholder, right? Or someone here.
Me.
Maybe Neil, yeah.
I think AV Ride would be a really good acquisition for Uber.
I mean, they're already partnered.
Yeah.
No, but like full acquisition.
Yeah, I mean, it's like.
I think it would complement them pretty well.
Yeah, I think Uber should pay them like $30 billion or something. I feel like that'd be a pretty good deal.
Did you guys see this? Revaluation of Nebius's equity stake following this financing, the ClickHouse raise in January, contribute to a gain of $781 million to non-operating income in the first quarter.
Which explains the big beat.
Yeah.
Do we have any more updates on the deferred revenue? Because I know last quarter was a couple billion.
It should be.
Because that made me think. I was like, wow, they really caught up to CoreWeave pretty quick. But that I guess explains it.
All right, I'll buy.
Hold on. Starting Q1 26, we revised the useful life for our server and network equipment from 4 years to 5 years.
Yeah, they announced that in the last call.
Yeah.
All right.
Which is
for the culture
still
and
pretty low.
That's
still pretty low. Like CoreWeave's is like 6 years.
Yeah.
Yeah.
Aren't some hyperscalers going up to 7 now?
Yeah. It's sort of
I think
insane.
Meta came out and said that they're going to have the useful life of some of their own chips going up to 7 years now because of the increasing memory costs.
Yeah.
I think they will probably raise the capex guidance during the call.
I have a feeling they will too.
It's 16
He
to
did say
20.
in that Excel interview, he did say that capacity is funded for the year, but that doesn't mean there's now more capacity. So,
I mean,
Yeah. I mean, the funding momentum seems to be pretty good, and if they're already at 3.5 contracted power gigawatts right now, it's because they must have. They must be even more optimistic now, and that requires capex.
Significant token factory customer wins in Q1 include Revolut, which is that
yep.
European fintech, and Monday.com as well.
Yeah.
Yep.
Those are two massive customers.
So what was the exact? Remind me, what was the exact capex number for the year?
16 to 20.
Yeah,
16 to 20. So this quarter was 2.5. So it's going to accelerate from here quite quickly.
Yeah.
I'm just licking my lips over here as an NVIDIA shareholder. Just
in New Jersey, we continue to service our customer commitments and remain on track to activate the remaining capacity through the year.
Nice.
Classic.
I thought it was going to be delayed like 2 years ago.
Yeah, same.
I've read
they
some.
were cooked.
Maybe it was one of those fake news websites. I don't know. AI is turning the internet dangerous.
You were so over the Iron Bulls, Mimba.
No, I'm kidding.
Dude, even CoreWeave's up 4% on this news. Iren's up 2%.
I'm just afraid that
every bag holder.
This move could fade once they raise capex guidance.
Yeah.
I think so too.
It's so funny. If they cut capex, the stock would drop. If they raised it, the stock drops. It makes no sense in this industry why capex doesn't. Why it's a negative. It's like buying inventory. Like they're directly selling what they're buying through capex for large profit. I find it unlike other businesses that raise capex and then you don't know if you're going to see a direct return on those investments. This is just you're buying GPUs and those GPUs will be sold based on 5-year contracts, 1-year contracts, hourly rates. What have you? And those rates are going up.
They got 3.2 billion in prepayments this quarter, hey?
Is that Meta?
That's a deferred revenue for you.
You're talking about how much they have deferred revenue right now?
Yeah.
I mean, we can't really know how much they got because they probably already spent a bunch of money. But yeah.
Yeah, so, looking at this quarter last year, cost of revenues was 49%, now it's 26%. Product development was 72%, now it's 17%. And SG&A was 120%, now it's 36%. So improving immensely year over year on all those metrics. Pretty nuts.
If over the next 2 hours these companies hold this type of pricing, the semiconductor ETFs are going to fly. I mean, all the names are up. Micron's up, AMD's up, Marvell is up. I don't know if this is China news. It probably is, right?
Probably.
Wix is down 15%.
You thinking of rotating some, Manuel?
Sorry?
You thinking of rotating some money from Nebius to Wix?
No. I'm not selling Nebius. But I was just going to say that the volume is not really that meaningful for weeks.
Yeah.
But still, it will probably be that. I mean, I wasn't really expecting much from today because Monday.com was like up 30% and it faded the entire move and it's now red after earnings. So it was going to be a bit hard for weeks to revert that trend.
Yeah, and I think you're right. The things that they will potentially turn sour on is stuff like CapEx raises.
Yep, 100%.
But I think that's actually good for the business. Like,
especially after these results. It's like we can grow faster, we will grow faster, so we're spending more. Why not? Funny.
I mean, I think we're gonna get some like good news out of the China trip. Like, so many people are going.
You think they're going to open up business for Nvidia and etc. etc.?
I mean, I don't know, man. Like, what can I make of the fact that like half of the S&P market cap is going to China right now? It's quite large. I mean, I would be shocked if everybody came back empty-handed, you know?
My understanding is only Elon and Jensen were on Air Force One right now.
Yeah, the rest is probably going on the private jet, I assume.
Yeah, and he called up Jensen like last minute. He was like, "Hurry up, man, get in!" Like, well, it wasn't that pre-prepared.
Nebius. Who knew that a company, that a team that built Yandex could do something like this? Imagine if they were previous Bitcoin miners.
Never doubt the KGB agents.
Yeah, we are all communist shareholders here.
Yeah.
I
honestly think whenever you're buying into an industry that has this many tailwinds, there's going to be a lot of winners.
But some will win more than the others.
Yeah, and finding that out will give you exceptional gains if you can find the biggest winner. Maybe it's Nebius, but
maybe.
I mean, we don't know. Okay, it's looking likely, but yeah.
Thanks, Jack, for the donation. I'm not going to bring that comment up on screen. I mean, fuck it.
Yeah, he's been saying this
Jack,
in my chat constantly.
Thanks, Jack, for the congrats on the gains.
Just end it there.
Yeah, I gotta come up with a new price target because I think mine just got hit.
For December 31st?
Yeah.
Anything else? Oh.
Even Rocket Lab is back up 6.3% today. 125 new all-time highs as well there. This thing has really gone to the moon.
125 right now?
Yeah.
Rocket Lab?
Jeez. Yep.
So 27.
So Manuel, we are very happy today.
Yeah.
We'll see what the local does tomorrow.
Rocket Lab just turned a 27 bagger for me.
Fish.
Rocket Lab just in the pre-market has gone up double Manuel's cost basis.
And Nebius is up my cost basis in the pre-market. It just reached 8 bagger.
Manuel just comes on live every 3 months just to flex.
Yeah. I shouldn't come.
205. Oof.
Micron's 810 right now.
Nebius up almost 15% pre-market.
Tevis, throw the candles up. I'd rather look at the candles than our faces.
Speak for yourself, man.
Yeah, seriously.
You're just looking at yourself.
Oh man. And the call starts in what, 25 minutes, I assume?
Yep.
Cool.
Up 13, nearly 14% on the day. 204 right now.
So far.
So far, yeah.
So far, yeah.
I mean, if we were betting men, what do we think it goes to more likely? Back down to 0% or up to 20%? Because I've got my money on 0.
Yeah, I was gonna say I do think during the call there's gonna be CapEx expansion conversation. It'll sell off pre-market and then it'll probably slowly climb up throughout the day. That's what happened last earnings and the one before that, I think. It essentially sells off on CapEx stuff and then the market goes, oh wait, we're being dumb. And then they bid it up.
Yeah, I'm happy with that. Don't go to 215 too quick,
Yeah, give me a chance here.
Take your
Hey,
time.
don't go to 200 by July, right, Tanner?
Yeah.
I will get a better cost base than that. Like it will happen. Or a better strike, I mean. That being said, we're climbing back up to 206 right now.
Yeah.
And there we go. New highs.
Oh man.
Manuel just made another $1 million.
Yeah, we should.
I wish. I wish.
What a day. All-time high in the port, I'll take it.
Yep.
Whew.
I don't want to go into the office right after this.
You might not need to.
Yeah, seriously.
Just call your boss and fire him.
Yeah, I'll just tell him on the stream, hey, I quit.
No, just fire him. You're in that position now.
Yeah.
Just say, I buy the whole company.
Are you coming in today? Watch your mouth.
Work suddenly becomes optional.
Who do you think you're talking with?
Suddenly he pops up in the chat. Tevis, where are you?
Nvidia is also at 225.70.
Yeah, I do think Nebius reported on a good macro day in general. Like the whole market's pumping for this China trip.
True. And yesterday, it was nice to see like just a small correction to like
small correction, micro down
correction.
No, I mean it's because if we pumped yesterday, the likelihood of pumping today would be lower, I guess.
True. Yeah.
Full porting Nebius might have been one of the greatest financial decisions of your life. Whoever said that, hobby investor.
That's my guy, Hobby.
Yeah. You guys still work? Oh,
207.
One yet.
207.
We're going for 208 almost immediately here.
Yeah, this is not slowing down.
Up 16% in the pre-market.
And now that we have another gigawatt scale data center being built, we will have for sure new large contracts in the next few months.
Yeah, I do agree with that actually.
Can my prediction of them getting an Anthropic deal this year still come true?
Yeah, I think it will.
yeah, they definitely have to.
209.
We're going for 210.
Oh, man.
Who would have said?
I mean,
Can you believe if you look back, there were some red candles back here? Wouldn't want to have been those guys.
Poor guys.
Yeah, those are somebody's cousins, brothers, sisters.
210, we just hit 210. Holy.
Now they're crying before their day job. What am I talking about? Also, my gains are capped at 200 as we speak. Like none of these candles are even mine.
What?
To me, where my mouse is, that's like the candles have just stayed flat.
It's about to. Oh my lord. Oh man.
My 220 is not that safe anymore.
And meanwhile, I have 215s over here, like sweating.
It's like, increase capex, please.
Please say something's not going to plan, or there's a slight delay, or
Dude, this is so entertaining. Just 3,000 people on the stream watching this thing tick up every dollar. We just call it out. Just like watching paint dry in the most entertaining way.
it's not, bro. It's real money being made. This is this is super exciting to me.
Yeah, it's like you're getting rich in real time.
Yeah. Once you start seeing a red candle, turn off the stream. Go back to our faces. While we see green candles, keep this up.
Yeah, Nebius is over $52 billion now.
Jeez.
Still a long way to go to the $100 billion market cap.
This is true.
Nebius to 1,000, anyone? Any takers?
By 2030, sure.
That'd be a nice day. The $100 billion market cap. What would be that? Like 400? Close to 400?
Yeah, pretty close to 400. Well, they're going to dilute a bunch by then, so probably like 450.
It'll be a nice day when it comes later this year. All right, call is in about 18 minutes for those asking.
Yeah, I guess, what are you guys looking to hear on the call? Besides all of us wanting CapEx guidance to go up.
Stonks.
I mean, I was looking for updates around how they're tracking towards their data centers, the build out.
Yeah.
But they provided a little bit of that. Curious to see if they're going to talk a little bit more about it. I don't know. What would analysts ask? They're going to ask around CapEx. They're going to ask around.
I think someone's going to ask about the sentiment about oh, we're seeing that 50% data centers are being stopped. How does it affect your timelines? I feel like that'll be a sentiment sort of question.
And Arkady will go
yeah, he'll have a big sigh.
Just look at our guidance, man.
But I have a feeling the analysts will ask that. Even though even the Data One CEO kind of dispelled that as well on the interview, if you guys watched that.
Yeah, that was.
Yeah. I want to know how are they being impacted by the components prices and memory?
Yeah, that too. Yeah,
because they had already secured the memory components for the first contract with Microsoft and the first contract with Meta. So now I'm not sure if that's the same for the next contract with Meta. So some color on that would be nice. But yeah, I think they're saving a big announcement for.
Do you think so?
Not for the call. I'm saying
okay.
For the future in terms of a data center in Paris. But this is just speculation on my side. I've talked about it before, but they had a few job listings suggesting that. But they are being a lot more careful with the wording right now. Once I started to post everything and exposing everything, they now eliminated that sentence that say you're welcome to work in our co-location or in our data center or whatever. They now eliminated that sentence from the job listings. But I catched one about Paris, but in the day after they eliminated it, so I wasn't sure if it was because they said on our own data center or in our data center, something like that. And they only say that when it's owned by Nebius, and the only data center they have now in Paris is a co-location with Equinix. So, and the interview with the CEO of Data One was actually in favor of that because he said the grid in France is 100 times better than the US, so it's really favorable for large-scale data centers. But again, I'm just speculating. I just think that if we're going to build a huge data center in Europe, it's gotta be in France or something like that. Because in Finland they already have the flagship. Now they're building another one, and they have another publication. So I guess it would have happened already, or at least it would have been already under plans or preparation. I don't know, but I could be wrong as well. So
they don't have one in the Netherlands, do they? No.
No.
In
The
the
Netherlands?
they don't have any.
No, I mean, I also wrote a post with that because I found the job listing saying you're welcome to work in our data center in Amsterdam, but like half an hour later they had eliminated it. So
you're pissing them off as well.
no, I think they find it funny.
Yeah, no.
Like, at this point, they just write them exclusively for you, like just leaving Easter eggs for you to find.
Like every day, I check like job listings several times a day, like on their website, on LinkedIn.
You muted Tanner.
You're muted, Tanner.
I just said, could you guys just email them to me? I'm gonna find them anyway.
Yeah,
actually,
they must think that I'm a stalker because I'm on LinkedIn. I'm always like stalking them all. Like I know like 30 people from Nebius that if I found them on the street, I would know them. So they might be scared of me at this point.
Just every day they wake up, they're like, your portfolio has been viewed by, it just says like 16 times by Manuel.
It's his like profile picture, you know.
Yeah.
But so far it has paid off to be
And a
like
Nebius hat on, just like this.
But
I mean, they will get a
actually-
lot of questions on the acquisitions, integration, token factory, agentic services, how that helps the business, margin wise, things like that. I think could help the whole picture.
for sure.
I mean, all of these announcements from yesterday, I assume some analyst is going to ask something about it.
no, yeah, I mean, especially after yesterday, which had another acquisition.
All right, call is going to be coming up shortly here. Tanner, do you know if I like leave the stream right after the call, obviously not sharing something, but what happens is it'll keep running until everybody leaves, right?
Huh?
If it just goes away and leave the stream open, right?
No, if I leave, like if I exit the stream, if I leave the studio, not end it, but exit.
Okay.
Yeah.
Then we're still here.
It'll keep going, but then we'd
But then
all
you
have
have
to
to end it,
manually
right?
end our streams through YouTube and Twitch.
And yours would keep going on, right?
Yeah.
So just leave it open on your phone and then just end it.
Tevis, you just made enough money to not have to work today. You can last the 5 minutes to get past to 9 o'clock.
Yeah, we'll figure it out when we get there.
No, I feel like you're gonna leave us in some sort of weird, unendable stream thing and just detonate this stream.
No. I'll just come back on my computer like 15 minutes later and close it. It'll be fine.
What time do you have to go?
Pretty close to right after the call. I got a 9:30 like workshop thing I gotta be there for. So
9:25.
9:30. So you're not going to watch Nebius breaking like $250 at open.
if it's at 250, I'll
Then you can quit today.
I'll skip for the day. Yeah.
Or you're gonna see at market open that it's 179.11 or somewhere around there. Again, like many of these earnings lately.
This is so funny when you start selling cover calls on companies you like and you have to turn bearish.
Dude, it's so that's exactly what I just did. I'm like, this
So
quarter
funny.
barely is.
Yeah, it wasn't
Yeah,
much.
it's whatever.
I feel like a
What
stranger.
dilution? Who cares?
Full year's contracted power done in Q1, Nothing.
I mean, like, I knew this was going to happen, but at the same time, going into today, it was like $179. I was like, like even if it goes up, 15%, like I'm still safe. And we're already up 17%, and the call hasn't even started.
And typically, what happens is it sells off before the call.
Samir says, "SoFi kept everything working." Yes.
Man, what a quarter.
What a past couple of weeks.
Yeah.
Crazy. Manuel sending emails to the whole Nebius group team.
Congratulations.
Congrats on the quarter, guys. I expect you all in the office.
I expect you all in the office.
Oh man, they're gonna get like handwritten letters in the mail. It's like,
actually, I haven't talked about.
Oh, it broke 210, by the way.
I haven't talked about this before, so I won't say too much. But I might be doing a field trip to the US in less than a month.
In less than a month?
Yeah.
Oh, sweet.
It's exciting. You gonna go visit New Jersey while you're there, or what?
No.
No, he's gonna go to Mississippi, Missouri. I mean,
are you staying for the World Cup at least?
Where are you going?
I'm going to. It's not to any data center, by the way.
Okay.
That will be in Europe, not in the US. But
no one even said that.
No, but it's related, but not any like I don't have any insider information, nor I'm visiting anything in the US. But I might meet some cool people.
All right,
and it's not Jensen. Nate.
You're interviewing Jensen. Confirmed.
I mean, Jensen wish. I'm not sure if I can find some spare time for him.
He's like, I'm meeting up with some Nebius shareholders, meets Jensen.
That's true.
All right, earnings call starts in 7 minutes.
Yeah, I have it up.
Cool.
It should be at.
There's nothing else. No, I was gonna say there's nothing else in here that I'm trying to find more, but I feel like we kind of covered everything.
Oh, fuck.
Okay. Yeah, I don't know if you're looking through it at all, but aside from the dominant quarter from base 44 and the stock selling off, because is that the only reason why it's selling off? Because that would surprise me. I'm pretty sure the investors of Wix understand that growth at base 44 leads to, worse margins, because that mix shift is worse margins right now for them. Is that what's bringing down the stock, Manuel?
Sorry, I wasn't listening. Can you
why is Wix down so much?
Because your numbers were worse without base 44.
Probably because it missed estimates.
But did they actually miss estimates, or they just base 44 what brought down that sort of mix shift on margins?
I would say
it's
both.
your stock. I just want you to tell like what the fuck is
No,
going
but
on with the stock?
Why is it down? Because the headline numbers were worse than expected. I mean,
but it's not changing the thesis for you.
No, for me it's not. I don't think. To me, I even prefer to see base 44 like outpacing expectations, because I mean, in the long term, I believe that it will be good for the company. I don't think. I think most people are probably scared of the margins drag, which was the main reason why earnings per share missed by a lot.
But does like that seems like a pretty understandable concept that if base 44 has worse margins and that outgrew.
Okay, I have another explanation. It's a software stock.
There you go. Yeah.
Easy.
So even if they had beaten, probably it would be down as well. Not by 15%. I didn't even notice it was down that much. But
they're gonna get disrupted by AI, Tanner, don't you know?
And now, like, the shares outstanding only changed in April, so we need to wait until next quarter for like every database and platform to update the market cap. Right now, if you let me check, they had 41.85 million shares, which at the current price is $2.7 billion market cap, which sounds pretty low for the two assets.
Did Brian answer your question, Tanner?
Well, I honestly think Brian did answer the question, but that's not the answer that I like.
By the way, what are we going to ask Nebius on the call? Because they have a little submit your question thing here. So maybe we put something together.
Maybe we'll have a good one, like component costs, which I'm sure will be asked by analysts. But...
Yeah, they'll be asked about them.
Yeah, we need something that won't be asked by analysts.
Just ask like, where's the $200 party? Like,
that was red.
The celebration party.
Will Jensen backstop your revenue by 6.3 billion as well?
And they're going to say like, no, Meta is.
Yeah.
Poor
Meta essentially told them, "Hey, we'll buy whatever you don't like, any amount that you can sell us, please." It's actually so funny. Whenever they originally came out with that $3 billion deal, they said, "Hey, like we limited the size of this contract because we just couldn't sell them additional capacity right now." At least I didn't imagine that whenever the new deal was end up to be signed, that it would 10x their original contract, that they would have went from 3 billion to 30 billion.
I love this question. Am I watching an old video or something? Nebius is at 209. Chart says 179. It's pre-market. Market's not open yet.
You guys were like, just me and Neil were invested when the DeepSeek crash came, right?
I bought after
wasn't
it.
in stock.
Correct.
I bought after it, and then
I had just a flashback about that.
Can you guys hear this?
Yep. Stop playing it.
Yes.
Jeez. You guys hear this? Just Linkin Park in the end.
I think keep playing it to just demonetize Tanner.
I don't need it now. I'm up 15%.
Yeah, but we're down 50 on SoFi.
You're the only one here that's not up 15%. You're up to $200.
Yeah.
I will be up 15%. Don't you worry. I'm going to roll it the second the market opens. It's going to be no problem. I'll get like 230s or something.
For September, probably.
Yeah, of 2027. It'd be no problem. But also, as long as I can continue to roll and I'm making more than what I think I would make on the S&P 500, I'm going to keep rolling. Let alone, I've already, since I started writing covered calls in this company, I made like $11 in credit already.
Mm-hmm.
Whoa, $11.
$11 a share. $11 a share. It's the premiums on this name are insane.
Yeah. That's why I love owning the same too. Premiums are nuts. The IV is insane.
Just pay the debit, you'll make it up. How do you think about that, Tevis? Like paying...
I usually pay for the debit if I really feel like it's going to keep running. Like I paid for a debit, I think at like 140 because I had underwater cover calls. And I was like, screw this, I'm not rolling. I'm just buying them back.
I just like write puts near where I wrote calls for, and then I'll just reduce my call position with the put premium.
Yep.
So is the call starting?
They're late.
I think it's
Time
They're
for an
late?
email.
No way, I'm selling, man. They're late to the call. What a Nebius.
The last company that was late, Iran, that...
Dude, wasn't that insane? They just didn't even release a press release.
Iran?
They just like waited to the call.
What's that?
I don't know. It's in our dust.
Oh.
Dude, Nate is the ultimate troll online.
Oh, I love messing with them, dude. It's so fun.
Every tweet of yours.
I don't do that on X, so I have to do it on stream. Sorry, guys.
Yo, Nate, did you get blocked by Mike already or not?
Oh, I was blocked by him like 6 months ago.
I just noticed last week that I'm blocked. I was
Which
like,
Mike?
okay.
Mike Alfred?
Mike Alfred, yes.
Yeah, he blocked me like 6 months ago.
The guy was spamming my posts, like saying shit about Nebius, like for like 1 or 2 months, like several posts, and I never replied to him, and it was so sad, and he stopped doing. I just gave him the worst thing he could get. He just wanted attention, and I never even replied to a single reply that he gave me. It was just like, oh, Nebius, oh, these kid analysts, oh, blah blah blah, and I was like, oh, this guy having a middle-age crisis, poor guy, just use your money and be happy. Why are you trolling kids? Like,
oh my god,
can't understand these guys. Man.
Yeah, having a guy like that on your board is just, unfathomable. I don't understand.
And he's on Iran's board, right?
I'm not even going to say my.
Yeah, it's just nuts. Are they still? Is the call still not started? Dang.
He's listening to music right now. He's got to finish his Linkin Park song before we get started.
Just jamming.
Tanner, can you give us a summary? I'm just joining. Nebius beat expectations, stocks up 17%. I give the greatest summaries.
So my explanation about Wix wasn't enough for you?
No, man.
But you just
I'm not Dylan in chat. He can scroll back. I need your answers now.
A session. If you would
we have
good luck, everyone.
You can click the Ask a Question tab in the top right of the live stream player. Then just type in your question and click Submit. You can submit questions at any time during the presentation, and the Nebius management team will try and answer them during the Q&A portion of the call. I will now hand over to Gili Naftalovich, Head of Investor Relations, to start the call.
Hi, everyone, and welcome to Nebius's first quarter 2026 earnings conference call. Joining us on the call today are co-founder and CEO Arkady and our CFO Dado, along with the broader Nebius executive management team. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business operations and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Form 20-F, which has a list of our risk factors. We undertake no obligation to update any forward-looking statements. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website, located at nebius.com. And now I'd like to turn the call over to Arkady.
Thanks, Gili, and welcome everyone to our call. We have had a great start to the year. We're building an AI-native hyperscaler. And I would say we're developing it across 4 dimensions. The first is capacity and scale. Second, product and functionality. Third dimension is customers and demand. And finally, capital, our fourth dimension. All of our focus is on execution across all 4 of these dimensions. Let me put our results of the quarter in this context. First, on capacity. As you see, we are building big. Last quarter, we told you that we already contracted more than 2 gigawatts of power while targeting more than 3 gigawatts by the end of the year. 3 months later, today, we have already contracted more than 3.5 gigawatts. And we are now targeting at least 4 gigawatts of contracted power this year. Today, we announced a new site in Pennsylvania to support 1.2 gigawatts of power once fully lit live. This is our second owned gigawatt scale site in the United States. Our platform is most efficient when we own the full stack, and we are building towards that. Our owned contracted capacity now accounts for more than 75% of our total power. But more importantly, we continue to build our full stack platform, and this is our second dimension. What does it mean? It means we don't just offer compute, we offer cloud services. Services that span across the AI lifecycle, from bare metal to multi-tenancy to inference to agentic and more. And we have made significant progress on that front. And it's not just developing our platform and launching Esther version 3.5 this quarter. Our 3 acquisitions this year, Tavily, Eigen, and Clarify, demonstrate the uniqueness of what we're building. All 3 companies bring industry-leading engineers and researchers to Nebius. Eigen AI and Clarify strengthen our inference optimization solutions. Eigen was recognized as the #1 speed inference provider by NVIDIA. While Eigen optimizes at the model level, Clarify optimizes at the system level. And they both strengthen our in-house token factory offering. We also acquired Tavily earlier this year, extending our platform reach to agentic search, an increasingly significant part of the market. This acquisition brought us rare capabilities of what this new class of developers need. We also expanded our technology partnership with NVIDIA. We again achieved NVIDIA Exemplar Cloud status, this time on our GB300 for training workloads. We're among a small group of providers to achieve this status across multiple GPU generations. At our core, we're a technology company. We have top AI engineers and deep proprietary expertise across every layer of the stack, both hardware and software. We're quickly becoming a magnet for top talent. We're happy with our ability to enlarge our offerings through strategic acquisitions. Our clients appreciate the full extent of our offering. This is not common in our market. This is our strength, and this is our uniqueness. And we believe this is what will enable us to win. Demand is our third dimension, and it continues to be increasingly strong, but more importantly, our full stack platform allows us to capture and service a large and diverse range of hundreds of customers, not just several big bare metal off-takers. Our pipeline generation in the first quarter grew 3.5 times over the fourth quarter. And this is a record for us. And the demand is broadening across industries. Today, we typically see several customers competing for every GPU we bring online. We're building to support this demand with scale and discipline. New customers across a number of use cases are using our full range of offerings to solve their most challenging problems. For example, European fintech leader Revolut recently began using our token factory. In physical AI, 1X Technologies is using our cloud platform to build general-purpose robots. In life sciences, our cloud platform is enabling startups to build more powerful models that accelerate drug discovery and advance the fight against diseases in ways that were previously impossible. And beyond technology sectors, larger companies in industries such as manufacturing, energy, heavy equipment, and pharmaceuticals are increasingly engaging with us. Demand is high. Everything we build with is sold. That is what is driving us to build more and to raise our 2026 capex guidance to between $20 and $25 billion, which is up from our prior range of $16 to $20 billion. This increase reflects investments in our 2027 capacity that will come online early next year. We expect these investments to contribute positively to revenue in the first half of 2027, where we already have customer commitments in place. Meta is one such customer. We need to invest to fully realize this. This requires capital, which is our fourth dimension. We're doing a very good job in tapping the market at scale. We raised significant capital this year, more than $6 billion. More than $4 billion of that came from converts and $2 billion from NVIDIA equity investment. This leaves us with a strong cash position of more than $9 billion. More importantly, we have laid the foundation to raise substantially further capital this year. There are a variety of ways for us to do this. There is our recent Meta contract. First, let me just say that we're very proud of our relationship with Meta, and there is tremendous respect between our tech teams. Formally, this is a $27 billion contract with Meta, but in fact, it's worth a lot more for us. This contract alone can unlock billions of dollars of capital for our own multi-tenant cloud at attractive rates that may not otherwise be available to us. On top of this, we also have our first contract with Meta and our Microsoft agreement that will provide additional financing opportunities. Obviously, there are many other untapped options for us to finance our public cloud build-out, from the significant prepayments we get from customers to asset-backed financing of our bare metal contracts to corporate debt and so on. So to close, it has been a great quarter. We're even more focused on what is ahead. We will continue to execute, expanding capacity, building our cloud platform, expanding our customer reach, and financing growth diligently. Everything we build, we sell, and we're still in the very early days. I want to thank our team for the incredible work day after day and night after night, and to thank our shareholders for your continued support. And with that, let me hand it over to Doug.
Thank you, Arkady. Indeed, we are off to a strong start to the year with a number of important achievements. First, we accelerated revenue growth during the quarter. We also significantly expanded our margins, and we strengthened our balance sheet. I will touch on each of these, share some color on our results, and conclude with guidance. Please note that all comparisons are year over year unless noted otherwise. So let's start with the revenue and ARR. In Q1, we grew the group revenue by 684% year on year to $399 million, up 75% from Q4. Once again, we sold out our capacity as demand continued to exceed available supply. Our Nebius AI business, which excludes our consolidated investments in Triple10 and Avride, delivered even stronger results. Revenue grew 841% from last year to $390 million, representing an 82% quarter-over-quarter increase and 98% of group revenue. Growth was driven by capacity scaling and was further supported by strong utilization of pricing. Annualized run rate revenue for our Nebius AI business reached $1.9 billion at the end of March, up over 50% from $1.25 billion in the previous quarter. As we delivered strong top-line growth, we also remained focused on profitability. Group adjusted EBITDA was $130 million compared to $15 million last quarter and compared to a loss of $54 million a year ago. Group adjusted EBITDA margin was 32%, continuing the inflection in Q4 and reflecting operating leverage in our model. Nebius AI business adjusted EBITDA margin expanded to 45%, up from 24% in Q4. This improvement was driven by strong revenue growth. The gap between group and Nebius margin essentially reflects our investments in Avioride and Triple10. Both are still early-stage companies and require substantial operating investments as they scale. We expect Nebius to represent the significant majority of group adjusted EBITDA for the foreseeable future. As mentioned in the past, our intention is to find strategic and financial partners for these businesses and then consolidate them in the future. Net income of $621 million benefited from a valuation adjustment on the back of ClickHouse recent public round. This is a non-cash item that captures the growth in the underlying value of the asset. And now turning to our balance sheet. Since our last call, we have continued to strengthen our financial position. In March, we closed a private offering of convertible senior notes, raising $4.3 billion in gross proceeds at attractive premiums and coupons of 1.25% and 2.60%. In the same month, we announced a $2 billion equity investment from NVIDIA, reinforcing our alignment with one of our key strategic partners. Prepayments from our customers also reached a new quarterly record. Operating cash flow of $2.3 billion was up from an operating cash outflow of $198 million in Q1 last year. The sharp increase was primarily driven by upfront payments from our customers. Together, these sources of capital increased cash and cash equivalents to $9.3 billion at quarter end. Now let's speak about our CapEx. As Arkady mentioned, today we are raising our CapEx expectations to $20 to $25 billion for the year. The expansion of our infrastructure footprint remains one of our highest priorities, given the strength of market demand and customer activity. We are building for 2027 demand, where we have customer commitments already in place. And so we have near-term visibility into future revenue associated with this investment. As always, we will invest in capacity with discipline and rigor, including the capacity we are bringing online in 2026. In terms of how we build and how we'll fund the capacity in the year ahead, we will continue to leverage a diversified range of funding sources. On the debt side, during the past year, we built our ability to take on debt capacity. For example, with our Microsoft contract and our 2 Meta contracts, we expect to unlock the ability to raise significant capital through asset-backed financing. We expect this to be at attractive terms based on Microsoft and Meta credit ratings, and will inject this capital into building our cloud business. In addition, we expect to raise corporate-level debt. We plan to start tapping into these financing options in the near term. And on top of that, our financing options include our at-the-market program. We have not utilized this program to date, but we are evaluating it regularly. Obviously, we are very focused on generating prepayments from our current and future customers in order to reduce the capital needed from equity and debt financing. We may also evaluate other financing options, but will ultimately pursue whichever vehicles serve best the long-term interest of the business to support our expected capital spending in 2026. The bottom line is that as of now, given our strong balance sheet and the work we have done putting in place the various long-term contracts, we have laid the foundation to enable us to access a wide range of potential funding sources. And now, turning to our outlook for the year. While it remains early in the year, our strong Q1 performance reinforces our confidence in our annual targets. As such, we are reiterating our full year 2026 guidance for annualized run rate revenue of $7 to $9 billion, group revenue of between $3 and $3.4 billion, and group adjusted EBITDA margin of around 40%. Three key parameters will determine our growth profile and margin progression throughout the year: utilization, pricing, and capacity. At present, neither of the first two parameters is limiting our growth. The third, capacity, will play an important role in unlocking our growth potential and driving margin flow through. On utilization, we continue to sell out our capacity, and we expect this to be the case for the foreseeable future due to strong market demand and our healthy pipeline. On pricing, strong market demand is translating into pricing gains in our latest deals. On capacity, the timeline of deploying the new capacity impacts both top and bottom line results from quarter to quarter.
We anticipate a non-linear quarterly adjusted EBITDA margin progression during 2026. We will see this in Q2, given the back-end weighted nature of the capacity we bring online. These investments unlock growth by increasing capacity substantially from Q2 to Q3, leading us to be confident in our adjusted EBITDA margin returning to Q1 levels in Q3 before moving even higher in Q4. Overall, we are confident in our full-year targets. In closing, Q1 was another quarter of rigorous execution across the business. We delivered a strong revenue growth, margin expansion, new business wins, and continued capital discipline. As we look ahead, we will continue to scale rapidly to capture the tremendous market opportunity ahead, while remaining balanced, disciplined, and focused on delivering long-term value for our shareholders. With that, I'll turn the call back over to Gilly for Q&A.
As a reminder, if you would like to ask a question, please click the Ask a Question tab in the top right of the live stream player. Then just type in your question and click Submit.
Thank you, moderator. The first question from our investors on the portal is from Alex Duval at Goldman Sachs. To what extent have you started to see the impact of stronger GPU pricing reflecting in your core AI business? Additionally, is there a way for us to think about the share of older, shorter-term contracts that could benefit from this pricing dynamic? Mark, would you be able to answer this one for us?
Thank you, Alex. We continue to see strong pricing across both old and new GPU generations as demand continues to exceed our available capacity. We just raised prices again in the latest quarter, and we are still selling out across all chip types at the higher prices. We're in a very dynamic market, and we have built a resilient set of processes that allow us to adapt and respond accordingly in any market environment for both new and existing customers. The strength is showing up in a number of ways beyond just price. Contract durations are extending, with the average duration of contracts growing meaningfully over the past few quarters. Also, average contract values continue to increase across new logos and existing accounts, where we're seeing strong expansion as well. And finally, prepayments are becoming more significant. Customers of all types are prepaying in order to lock in future capacity, including the hyperscalers. This improves our working capital position and gives us flexibility around external financing needs. Our go-to-market model is being built to be agile and adapt to the market and yield outcomes that can best help us continue to scale our business.
Thanks, Mark. We have a few questions coming in on CapEx guide and cost inflation. Andre, can you please discuss how much our raise in CapEx was driven by higher capacity growth versus component cost inflation?
Sure. Thanks, Gita. Well, the increase in this spending is driven by visibility for 2027 and our need to invest ahead of capacity that we expect to bring online. We'll add much more capacity in first half of 27 than this year, and that requires more CapEx spend in the starting from now in the later part of this year. We have been able to secure sites and power and customer commitments for 2027, and so we are ramping up construction activities accordingly. And in short, the high number reflects confidence in our contracted demand pipeline and our ability to secure the infrastructure to deliver against it. It's not the cost pressure. The impact of the component inflation in our 2026 program was quite material, around low single digit as a percentage of total spend. Also, because we secured a lot of 2026 back in 2025 at the previous price levels.
Thank you, Andrei. Next question we have is from James Kisner at Water Tower Research. Nebius said AI cloud adjusted EBITDA margin nearly doubled quarter-over-quarter to 45% in Q1, while you're targeting around 40% for the full year. What's driving the implied step down? Can you walk us through the adjusted EBITDA margin progression for the year? Dado, please.
Yeah, thanks, James. Yeah, indeed. As you saw in the quarter, our Q1 margins were really strong. Nebius AI adjusted EBITDA margin reached 45%, nearly doubling from Q4. And that really reflects the underlying strength of the business. On the one hand side, the demand we are seeing in the market, then the terms that we are also able to negotiate with our contracts, and the unit economics of the platform itself. So as I mentioned earlier, as we move throughout the year, you will see some quarter-to-quarter variability. And I think this is worth taking a moment to explain the dynamic. We have made a number of important investments in the first half of the year. Hiring across go-to-market and engineering, our recent acquisitions, and continued development of new product capabilities. And those investments are already in the cost base today. And we expect them to actually benefit from the business going forward. On the capacity side, our delivery this year is back-end weighted, and we have a meaningful step up coming in Q3. We have very clear visibility into both the investments that we have made and also the capacity that we are bringing online. So really what you are seeing across the quarters is a timing dynamic, not a structural one. The investments land first, and the capacity and the revenue it supports come online shortly after. So given the timing of our investments in Q2 and the timing of the deployment towards the end of the quarter, we actually expect those margins in Q2 to go a little bit lower, returning to Q1 levels in Q3 and stepping even higher in Q4. So for the full year group, we expect a margin around 40% as we have guided. And on the longer term, those dynamics will smooth over time, and our capacity footprint continues to scale, and higher value software solutions will become larger part of the mix.
Thank you, Dado. The next question is around capacity from Andrew Beal at Arete. Andrei, maybe I can come to you here. Can you talk about the timing of capacity additions beginning in Q2 and when you expect key sites such as Pennsylvania to reach full capacity?
Thanks, Gilead. So, Andrew, first about the Pennsylvania. Pennsylvania is gonna have lights up by the end of 2027 with the first around 250 to 300 megawatts probably. And then this schedule looks like adding 300 megawatts each year up to 1.2 gigawatts in total, actually, and 1.2 according to our power contract we have in our possession by mid 2030 or the beginning of 2030, to be more correct, more precise. But overall, our capacity schedule is just ramping up. This year is heavily towards the second half of the year. Q3 is March is a very significant improvement for us in terms of the capacity going online. Q4 also very significant, and then Q1 next year is where our bigger projects like Alabama and probably the first Missouri will kick in also.
Great, thank you. We'll probably stick with you, Andre, as we have a question from Josh Baer at Morgan Stanley. Can you address the media reports indicating delays at the Vinland, New Jersey site? Understanding you've delivered commitments so far, are there any delays to note for the remainder of the Microsoft contract?
So we delivered all our capacity commitments across our Microsoft and Meta customers. So the first Meta, as we already spoke, I believe the first Meta contract was fully delivered in Q1 this year. The Microsoft contract is way more stretched, and we have the delivery schedule up to the end of this year. We delivered the first tranche in November last year. And so we continue to be in the contract schedule. Again, it ramps up starting from the mid-year, and most of the volumes will be coming in Q3 and Q4.
Great, thank you. So we have had a number of questions around the Meta contract. A question from Alex Platt is, can you provide more details on the recently announced Meta deal? Can you explain how the 15 billion capacity option works? Should we view this as Meta backstopping 15 billion with a set attractive margin? And if you can get a customer with better unit economics on that capacity, will you take that instead? Mark, let me come to you here to walk us through this.
Thank you, Alex. First, I want to say that we love working with Meta, and we're excited that they chose to buy more capacity from us. This expanded new agreement is, to make sure that we all understand this, a 5-year contract for a total of $27 billion, and it is structured in 2 parts. First, there's a $12 billion commitment to dedicated compute capacity with delivery starting in early 27. And then second, as you pointed out, there's another $15 billion of additional capacity that we, at our discretion, can either allocate to Meta or sell to our AI cloud customers as it comes online for the duration of the 5-year contract. Let me explain this in a bit more detail. Meta is committed to buy up to $15 billion of any capacity in these clusters at our option during the entire 5-year contract. This commitment will likely allow us to finance the clusters with asset-backed financing at attractive terms, while selling them to, as I think you pointed out, to our AI cloud customers at potentially higher market prices. The unique combination of being able to sell at a premium, along with the commitment by Meta to purchase any capacity during the contract, should provide us with higher margins, less risk, and more visibility in our revenue. If the market remains strong, we should generate more than the $27 billion in revenue from this great agreement.
Thank you, Mark. We have a question from Alex Duval, Goldman Sachs, about M&A. Could you explain the rationale behind your move to acquire Agen AI and Clarify? How does this move improve your AI cloud platform capabilities? To what extent does this move mean that you could improve customer stickiness? Roman, I think we'll go to you.
Yeah, thank you, Gili. Thank you, Alex, for the question. First of all, I want to say that we are super excited with these 2 incredible teams of talented people from Eigen and Clarify will join us. And to deep dive in rational, let's start from foundations. Our view is that we should own the compute stack. That is where our vertical integration, our supply chain depth, and our hardware engineering generate advantage. And it's also the layer that drives the bulk of our economics. Above the compute stack, we build the full cloud solution. And software plays the role of enabler. By the way, we partner where partnership is the right path. And as you see now, we use M&A selectively where it accelerates our roadmap, brings in proven developer adoption, or adds capabilities complementary to what we are building. Acceleration is the key lens we apply to every potential transaction, where we can find rare talent or proven adoption. This is, by the way, the example of Tavidi that has incredible developer adoption that would, in general, take us meaningfully longer to build organically. Acquisition is the fastest path. And we evaluate every potential deal against the clear criteria. Does it deepen customer engagement, increase lifetime value, unlock the new category of the customers or use cases we can address, and in general, strengthen our position as a full stack AI cloud?
Thanks, Roma. We're getting more questions on M&A, so we'll likely stay with you here. Several participants are asking on whether token factory and software more broadly are distinctly different from the infrastructure layer and training. We'd love to get your insights around agentic monetization and the opportunity there.
Yeah, thank you for the question. As I said, we look at the software as an enabler. So it's not that we build the software to generate separate revenue stream. The software, first of all, plays the role of unlocking the new capabilities for us, unlocking the new opportunities in the types of the workloads that growing on the market and the types of the customers that we can address. Software changed the shape of the customer relationship. Every layer of the software unlocks another group of users and the customers. We want to meet customers where they need us and let them consume our vertically integrated solution in the way that they need, and it might be a different way for different types of the customers. Customers come to our platform for different needs. In essence, they all need to run AI at scale, which means that they need compute. But for example, people who use our multi-tenant cloud, they, to a big extent, come for large training jobs. People who, and these are like research-driven, data scientist-driven workloads. People who come to Token Factory, they build vertical AI integrated vertical AI products or apply AI in their enterprises. And they come for the tokens. And moving forward, we'll see new ways to consume infrastructure at scale that will be the agentic, end-to-end agentic workloads.
Thanks, Tal. We have a question from Taliani at Bank of America. How do you plan to finance the additional CapEx, and are you considering disposing some of your non-core holdings? Taro, over to you.
Happy to take this question, Tal. Well, our balance sheet is strong,
at the end of the quarter, 9.3 billion of cash and cash equivalents. And this was supported by 2.3 billion of operating cash flow, which was generated in the quarter, right? Mainly, coming from payments from our customers. So currently, more than 90% of the CapEx range that we projected in February is already secured by cash and contractual commitments. The incremental capacity reflected in our raised $20 to $25 billion guidance will be funded through additional financing. And as I have mentioned in previous calls, right? So we have a wide range of sources available to us. On the debt side, we expect to use asset-backed financing against our contracts with Microsoft and Meta. And we may also raise corporate level debt. On the equity side, we have established an at-the-market program from up to 25 million Class A shares. We have not utilized these programs to date, but we are evaluating the program regularly. In any case, as we have done today, we will apply consistent guardrails on cost of capital and shareholder dilution while maintaining a disciplined capital structure.
Thanks, Dada. We have gotten a few questions on pipeline. One from Nehal Chokshi at Northland Capital. Your pipeline is up 3.5 times or quarter over quarter in 1Q26. Does this pipeline include hyperscalers like Meta, like the Meta deal? Can you also provide more details on what this number represents and how likely are you to convert pipeline to revenue? Mark?
Thank you, Gili, and thank you, Nehal. The referenced pipeline growth of 3.5 times a quarter, which 3.5 times quarter over quarter, which we're very proud of, is for our AI cloud business. And it does not include any strategic hyperscaler deals like the Meta deal. It does include qualified opportunities across our core AI cloud and token factory products, as well as across all of our key customer segments, including AI natives, software vendors, and enterprises. What we can share about conversion is that we have maintained our solid win rates at the same time as we've accelerated our sales cycles and increased our average selling prices. And you can see this with some of the strong wins that we have, such as Sword Health in healthcare life sciences, and Rhoda and 1X in physical AI, and Core Automation, one of our AI native model builders, as well as Revolut and Monday.com, new customer wins for Token Factory. What we are doing is enabling our go-to-market teams to have a consultative conversation with our customers about their plans and for current and future workloads, including, as an example, what they're thinking about with regard to Vera Rubin's. We're also focusing and scaling our go-to-market and success teams to help customers to realize their plans, which turns into durable revenue for us. Speaking about scaling, by the way, we have a number of recent appointments, including key leaders for the Americas, Dan Lawrence, who is our SVP and GM for the Americas, and John Har, who has joined as GM for Asia Pacific and Japan, and Raja Agrawal, our VP for the Middle East.
Thanks, Mark. Another question that we have from the portal is saying that you emphasize the momentum in your software stack. Where are you seeing the most momentum across the stack today? Why are customers choosing Nebius? Roma, over to you.
Yeah, thank you, Gili. I think it said so many times by different people that now the time of inference, and we see the same. Inference is the fastest growing segment, new segment in our stack. And we see a very lucrative place where Nebius is positioned. We have the winning combination with capacity and customers need scale. We have the strong software stack, and we invest in-house and with the new announced acquisitions to be on the top performance of supporting the most popular open source models and specialized models. We can provide the best total cost of ownership and like cost of tokens for our customers through the full stack optimization of the stack. And of course, we care a lot about the developer experience. So we think that in a way, we combine the best from different worlds of specialized inference platforms, the scale of AI specialized clouds, the scale of hyperscalers and specialization of AI specialized cloud. So Token Factory is our primary inference product now, and we are seeing good product market fit. If you look on the next layer, on agentic, it's still to be defined what is the final shape of the product and who will be the winners. We expect that Nebius will play the same role of foundation for people to build at scale, and will provide the set of tools and platforms to optimize workloads in agentic world.
Thanks, Roman. We have a question on customer concentration. Mark, how do you think about concentration risk given how large your contracts are with Meta and Microsoft? What does the rest of your revenue base look like in terms of customer diversification?
Thank you, Gili. As a reminder, I think we say this over and over again, but I think it's important to recognize that our priority is our AI cloud business. As such, we are very intentional about how we are pairing these key strategic relationships with the likes of Meta and Microsoft with a diversified core of our AI cloud customer base. We do not take these big strategic deals lightly and only take them when we see terms favorable for our core mission. Again, serving our AI cloud business. We also very diligently capacity plan, and we're always looking to add capacity to best serve our core AI cloud customers, from developers all the way through to enterprises. Our AI cloud business is experiencing strong traction across all of the products that we're offering, as well as customer segments and the verticals that we're chasing. The diversified AI cloud book of business as well gives us both customer and use case visibility that helps to fuel our go-to-market and drives our pipeline and revenue diversification overall.
Thanks, Mark. We have a question from James Kisner at Water Tower Research on the $2 billion investment from NVIDIA and expanded collaboration on inference and agentic software around Token Factory. What concrete deliverables should we expect over the next few quarters? And does the partnership affect the timing or scale of your Vera Rubin deployment in the second half of 2026? Andre?
Yeah. Okay, Gili. Thanks, James, for the question. So first of all, the NVIDIA strategic investment is meaningful across several dimensions beyond the 2 billion of equity and line of sight to 5 gigawatts of capacity commitment by the end of 2030 that we've done. It really deepens a multi-year partnership with our most important hardware supplier at the moment, when access to GPU supplies competitive advantage, so to say. We gain differentiated supply chain certainty on the future Rubin, Vera CPUs, and the networking. We also have a close collaboration with NVIDIA for the design and early support of the future SKUs. As of today, this is Vera Rubins and Vera CPU platforms. And we are able actually to have a early deployment and support on our cloud platform as soon as they will be publicly available. Again, it reinforces our position as a preferred builder of AI infrastructure and aligns our roadmap with the NVIDIA product cycle, which is very critical for the price and the performance and the utilization and just leadership overall. We are also expanding our software integration. Our announcement around physical AI is one example, and we are very, very excited about our partnership driving vertical specific advancements. We are also partnering with them to build software for inference and agentic part, and just recently achieved NVIDIA exemplary cloud status on GB300 for training. We are very much among the first cloud providers globally to receive for all the NVIDIA generation where this status is available. Yeah, that's it.
Thanks, Andre. Mark, maybe this one for you. A question from the portal. Some of your competitors have mentioned they are sold out for most of 2026 and even into 2027. If you are future selling, how much of your future capacity is sold out for this year and next?
Thank you, Gili. Yeah, first of all, we are sold out again in Q1, as we have for several quarters as demand continues to significantly exceed available capacity. The vast majority of capacity coming online over the next several quarters to 12 months is already under contract or earmarked for our AI cloud customers. We do retain a portion of capacity for self-service to serve those AI builders that Roman mentioned earlier. And then we proactively manage those allocations to keep the segment supplied as demand evolves. Separately, we are typically seeing 4 or more customers competing for every GPU we bring online. We have significant expansion plan for 2027, including Vera Rubin's, and we'll start selling that capacity as we move into the second half of this year.
Thank you, Mark. We also have a question on U.S. data center opposition. Tom, can you touch on some of the political opposition here in the U.S. related to data center construction?
Yeah, for sure, Gili. I mean, so definitely this is a big topic. It's something that, we pay a lot of attention to. But overall, I think what I would say is that the approach that we've taken so far, we found to be quite effective. And I would basically say there's a few sort of components of that approach and how we think about this. Number one, I think, first of all, not all companies that build data centers build in the same way. We're not all alike. And I think you've heard Andre and team, talk about how we build, the efficiencies that we're able to achieve, what we do around creating these, interesting technological ways of heat reuse and so on and so forth. So we build very efficiently, very effectively. And I think that's an important part of our story and what we talk about when we come into new regions. But of course, that's not enough. I think that, we also, the second thing is that we take a very transparent approach to what we do and how we talk about ourselves. I think that's not something that's necessarily universal in our industry, but it's from the very beginning when we're looking at a site and we're engaging, it's very clear who we are. We engage very actively in communities and talking about what our plans are, what we do, how we build, how we contribute. You can see us showing up at community town hall meetings, or I'm looking actually right now at Andrei Karanenko across the table in Amsterdam, who's just flown in from our event in Independence, Missouri yesterday, where we were engaging with the local government and communities. So we try and just be very clear and transparent about what we do, how we do, and what the benefit that it brings. And I think the last thing is that, look, when we come into a new region to build, we don't just build and then move on to the next city. These are long-term investments. And so therefore we have to look at these relationships with communities as long-term partnerships and relationships. So we think very much beyond what we do in terms of the building, but where else we can contribute through it, whether it's through our Nebius Academy, academic offerings, working with local universities, helping to train, reskill, retool, and so on. So we view this very much holistically as a long-term partnership. And so far, we found that this approach resonates well, but there's no room for complacency here. So, we continue to pay attention and make sure that we're doing the best we can to be a positive contributor to the local ecosystems.
This concludes today's call. Thank you everyone for joining. You may now disconnect.
Tevis is already oh no, he's still here.
All right, getting ready for work.
Okay, well then at least we can all wrap together then. What were some people's thoughts about the call?
Really good call. I think the CRO always highlights the best of what kind of the demand and where Nebius is heading. A couple quotes I have is prepayments becoming more significant across all customer types. We just raised our prices for GPUs last quarter and are still selling out the new high prices.
Yeah.
Average contract value continues to increase across all types of clients. And so the writing's on the wall still. The demand is still unbelievable. And this train's not slowing down.
There was a comment about CapEx. I wanted to get your guys' take. I didn't hear their answer very clearly. One of the questions was, is CapEx just being driven up by increasing memory costs? And I didn't remember what their answer was, but
he said basically no. Only a single digits percentage of total CapEx is because of the inflation on components, and that the majority is to fund the expansion in the first half of 2027. And he said we will bring more capacity in the first half of 2027 than in the entire 2026, which is pretty crazy. So next year we should at the very least double ARR.
I'm with you on that, yeah.
At the very least, because if they're going to bring as more capacity in the first half of next year than they bring unless the current ARR just assumes really a lot of capacity in December or something like that. But I don't think that's much plausible, let's say. I think in 1 or 2 quarters, they will probably issue an ARR guidance for next year, and it's going to be pretty huge if execution continues like this, which we have no reason to believe not.
Yep.
And I really 100%. Mark also said that they are seeing 4 or more customers competing for every GPU they bring online. That's insane.
Yeah.
It's, they're going to use the ATM probably soon if we continue to pump like this, but they're not really in a rush because they have 90% of the initial guidance, so 90% of the $16 to $20 billion already secured. The additional, they will do some assets-backed financing. They said that they've been saying that for a long time. So now with the Meta contract, I think they were waiting for that one of those agreements with the backstop that we have from Meta and CoreWeave from NVIDIA. I think that really helps a lot in terms of credit to get better rates in terms of getting funding. So I think we should see some kind of funding deal pretty soon. But at some point, they will tackle the ATM. Like if we continue.
I think another big thing too. Yeah, that I saw was the pipeline growth. The 3.5x quarter-over-quarter wasn't from hyperscaler deals.
Yeah, as well.
Which also just shows the growth of other clients other than hyperscalers. I know that's a big concern is, revenue concentration with just Microsoft and Meta. So I think it's great to see all their companies are also just growing immensely, and that's just a big thing too. Is I think hyperscalers is the start of this, inning 2 and 3, and then you have the mid caps and small caps is the later stages. And I feel like we're still just so early where most of the CapEx and most of the demand is from hyperscalers. What happens when all Fortune 1000 companies need compute, need billions in compute? It's just, we're so early. It's insane to me.
Yeah. And higher margin customers, the lower you go down because they're not just buying bare metal.
Exactly.
These analysts that so per this comment, when these analysts put their price targets of $200, 180, 170, like Nebius was trading for under $100 in many cases. So
yep.
Like those targets sound bearish now that we're at 207. So we're definitely going to get upgrades. Especially on the back of like the pricing power point was also something that stood out. They've said it before, but just reinforcing it over and over again around the leverage that they have with regards to pricing power, average contract values, them consistently raising their prices and having the flexibility to do so and seeing no hit on demand. And everything that they bring online is essentially sold out. Like you can see, I think the big dip. I mean, this came out when PPI came, so it might not be related, but it was when Andre was talking about the capacity coming online for Pennsylvania end of 27, and then scaling 300 megawatts every year until 2030ish, and then Alabama and Missouri in Q1 of 27.
I think it was PPI.
It was probably PPI, but yeah.
Everything is coming down after that PPI report, and it's likely we're going to get rate hikes. So, yeah,
that'll be interesting.
It's weird, right? Because there's going to be levels where, obviously, big companies, CoreWeave, Oracle, all these companies that are relying on debt, and Nebius talked about using additional debt instruments as well. Rate hikes will impact them, but also the margins and the growth rates here. It'll be interesting to see how the market balances that out whenever, obviously, 25 basis points, 50 basis points will still impact the company, but how much will it versus the rest of the general market?
Yeah, for sure. Something to call it too, they talked about was that adjusted EBITDA will fluctuate a lot over the next couple of quarters because they're back half for this year. So I would expect actually a little bit of a drop in adjusted EBITDA or maintain next quarter. Adjusted EBITDA margin drop.
Tevis looks stressed not because of Nebius, it's because he's literally working right now.
And because he has SoFi and rate hikes and stuff. Right?
He's on the clock and live.
Like everything else about my life, aside from Nebius, is the thing that's causing me stress.
Oh, it's all right, Tevis. We can wrap. We don't need.
Yeah, we can end up here.
9:30.
I mean, it's up to you guys. I can also just jump in with my phone and close the stream. But maybe Neil, if you have some closing words.
No, I like it. They talked a little bit about the AI token factory, right? It was up 3.5x this quarter, the inference as a service. So that's good. I think we will probably need to hear more about the software side of the business, how much revenue maybe comes from that and the growth there, which I think once it becomes material, they will probably share more and more. But all in all, it will be good if they do raise cash in the short run, then yes, maybe the stock will take a hit. I mean, very likely. That's fine. That gives us all opportunities, I guess, to buy more shares, and Tanner can keep his shares if it happens sooner rather than later. So guys, we should be happy.
You don't understand. I absolutely am going to keep my shares.
Yeah, but you get to keep it in a better way.
Yeah. We're going to keep them. If I have to roll, we'll roll. I'm not even in the little bit stressed. Like we even saw recently how much Nebius could get sold off, even though the company was continuing to kill it, and the company was in the $70 ranges on a poor macro. If we're going into rate hikes and all of these things, I'm going to have a ton of time to not only get out of these covered calls, but also potentially buy more.
Yeah.
Like while they're growing and stacking and all this stuff, the company, like the stock has also gone up a lot. And dilution will come, debt will come, there will be fears. And I'm going to collect premium the whole way.
Someone please kick this guy from the...
I'm protecting my own bags. You guys can figure out your own strategy.
I do think Nebius at 100 billion is kind of inevitable in the next 12 months. Just my opinion. But
what's that?
In the next 12 months, I like it.
And Nebius at 100 billion is kind of inevitable in the next 12 months.
I mean, I'll take it.
Clip it.
Yes. I think by this time next year, we'll be at 100 billion easily.
Easily, he says. All right, let's go.
No bias at all.
We're rebounding again.
Is he offering a backstop on this promise or not?
Yeah. Nate's a Palantir investor. He doesn't understand that companies don't always double. He's just like, no, it'll be
just
6 months,
20x, right?
There'll be another double, and
yeah.
All right.
All right.
Wrap there.
I think we're wrapping there. Thank you, everybody, for joining. Really appreciate it. Congrats on your gains with Nebius. And if you're not subscribed to everybody here, then definitely go do that. And we'll see you in the next one. Goodbye.